All right, let's get started. Today, we're going to be doing a deep dive into the Bitcoin Standard by Saifedean Ammous.
Oh, fantastic book.
Yeah, I really enjoyed it. It's a deep exploration of, well, money, the history of money, what makes money sound, and,
Hmm.
of course, the rise of Bitcoin and how it fits into that whole picture.
Yeah. It's a really timely book, especially I think with all the craziness we've seen in the markets and the economy recently, you know?
Absolutely. So we've got some excerpts here that we're going to be discussing.
Yeah.
And I think one of the first things that really jumped out at me was this idea that sound money should come from the market, not from governments.
Right, right. Like the Austrian School of Economics approach to money,
Yeah.
has to emerge organically. It's not something that can just be imposed top down.
Exactly. And the book uses some really interesting examples to illustrate this, like those giant stone
Oh,
discs.
the race
Yeah, the
stones
ray
on
stones.
the island of
Yeah,
Vienna.
yeah. It's fascinating. Like, how did these huge stones become a form of money?
Well, they were scarce, obviously, difficult to counterfeit,
Right.
and everyone in the community knew who owned which stone.
You couldn't just like forge a ray stone very easily.
No, no, it was a pretty effective system for centuries, actually.
Yeah, but then things went a little sideways, right?
Yeah, a little bit.
This guy, David O'Keefe, figured out how to use modern technology to basically quarry a ton more ray stones, you know?
Yeah. So he flooded the market, essentially.
He increased the supply dramatically, which of course led to their value plummeting.
Yeah.
And well, the UP's economy kind of went into chaos.
Hmm. It's a powerful example of how important scarcity is to sound money.
Absolutely. And it wasn't just the rice stones. Emmis talks about a similar thing happening with agri-beads in West Africa
Oh, right.
when European traders started, flooding the market with these cheap imitations.
Yeah. It destabilized local economies.
Wow.
Sadly, it even contributed to the slave trade.
It's a dark side of history, but it
Yes.
shows how crucial the integrity of a monetary system is.
Yeah. It's all intertwined: money, freedom, societal well-being.
So let's kind of trace how money evolved over time. We started with bartering, obviously,
Right.
then moved to using precious metals like gold and silver. Why did gold ultimately become the most popular choice?
Well, gold has some unique properties, right? It's durable,
It doesn't corrode.
it's divisible, you can melt it down into smaller units, it's portable,
You can carry it around,
and most importantly, it's scarce.
right? You can't just make more of it easily.
Exactly. That's why it's been considered a reliable store of value for, like, thousands of years.
Okay, so gold seems like a solid choice. But then in the 20th century, we see this big shift away from the gold standard. What happened?
Well, the rise of central banking really changed the game.
Okay, how so?
Governments suddenly had the power to manipulate the money supply. They abandoned the gold standard.
They could just print more money whenever they wanted.
Exactly. It started with these temporary suspensions during World War I.
Oh, yeah, right, to finance the war effort.
And then it became more permanent after World War II with the Bretton Woods system,
Ah, Bretton Woods.
which, it attempted to maintain these fixed exchange rates with the U.S. dollar tied to gold.
Okay.
But countries couldn't resist the temptation to inflate their currencies.
Yeah. It all fell apart, didn't it?
Yeah. In the 1970s, Bretton Woods collapsed. Basically, there wasn't enough trust that governments would maintain, fiscal discipline.
So we went from the system where, governments were limited by the amount of gold they had
Right.
to a system where they could just print money at will.
Pretty much.
What kind of impact did this have? Like, what were the consequences of this shift to what we call fiat currency?
Well, Ammous argues that the consequences are significant.
Okay, give me an example. What are some of the downsides?
Well, for one, inflation.
Yeah.
Your savings lose purchasing power over time.
Right.
So people are less likely to save and more likely to spend or go into debt.
Yeah, makes sense.
And it has all these ripple effects throughout society.
I bet. We're definitely seeing some of those effects today, aren't we?
Mm.
But before we jump into those, let's break down one of the key concepts from the book that I found really interesting: time preference.
Oh, yeah. Time preference is fascinating.
So what is it exactly?
It boils down to how much people value present satisfaction over future rewards. Like, would you rather have a candy bar today or 2 candy bars a week from now?
Okay, I think I get it. But are you saying the type of money we use actually influences how we think about the future?
Ammous argues that it does. He says sound money, like gold, encourages a lower time preference.
Okay, I see. So because it holds its value over time,
Yeah,
people are more inclined to save, invest, plan for the future.
exactly. They're thinking long term.
But if your money is constantly losing value due to inflation,
Right.
then you're more likely to just, spend it now and worry about tomorrow later. Right?
That's a higher time preference.
Yeah,
It encourages immediate gratification, short-sighted decision-making.
that makes sense.
And Ammous connects this shift in time preference to a lot of social issues, actually.
Really? Like what?
Well, he talks about everything from the breakdown of the family to, believe it or not, a decline in the quality of art.
Wait, the quality of art, how does that tie in?
He makes this really interesting connection between the relative stability of money during the Renaissance,
Yeah.
and the incredible art that was produced during that time. Artists could dedicate years to their craft without the pressure to, churn out quick, trendy pieces for immediate profit.
Wow.
Yeah.
Yeah, it's like that whole get-rich-quick mentality we see today is partly influenced by the fact that our money is constantly losing its value.
Yeah.
Huh, that's pretty deep.
Yeah, it makes you think about the hidden impacts of something as fundamental as money, right?
Totally. And it all ties back to the idea that prices convey vital information in a free market.
Right.
Ammous uses the example of an earthquake affecting copper production.
Yeah.
So the price of copper goes up.
It signals that there's less of it available.
Producers ramp up production. Consumers maybe consider alternatives. It's like an invisible hand guiding the market.
Precisely. But when governments try to control prices or manipulate the money supply, those signals get distorted.
That leads to all sorts of economic inefficiencies.
Right. A lot of the problems we see today.
Okay, so this is where Bitcoin enters the picture, right?
Yes. Bitcoin, as a decentralized digital currency with a fixed supply, it proposes a potential solution to a lot of these problems.
Okay, but I have to admit, I'm still a little fuzzy on how Bitcoin actually works.
Sure. Well, imagine a giant public ledger that keeps track of every Bitcoin transaction.
Okay.
This ledger, called the blockchain, it's secured by a network of computers all over the world.
So it's not controlled by any one entity, like a bank or a government.
Exactly. It makes it nearly impossible to counterfeit or manipulate. No one can just print more Bitcoin. Its supply is predetermined.
Capped at 21 million coins, right?
That's right.
So it's like digital gold in a way.
Yeah. In a way, yes. It's scarce, secure. But is it really a viable alternative to our current system? That's the big question, right?
Right. There's a lot of debate about Bitcoin's future and its potential to disrupt traditional finance. Some people are like all in on Bitcoin. They see it as the future of money. Others are way more skeptical.
Yeah. There are valid arguments on both sides.
Let's hear them. What are the key arguments?
So on the pro-Bitcoin side, people highlight its key advantages. It's decentralized, secure, has a predictable supply. They believe it offers protection against inflation.
Yeah.
And empowers individuals by giving them more control over their money.
It sounds pretty revolutionary, honestly.
It does, doesn't it?
Yeah.
And it has the potential to facilitate global trade and reduce our reliance on all these government-controlled institutions.
Wow. But I imagine there are downsides too, right?
Of course, the critics, they point to its volatility.
Yeah. The price goes up and down like crazy.
Yeah. Exactly.
Yeah.
They say that makes it unsuitable as a store of value. They also talk about scalability challenges, the network's limited transaction capacity.
That makes sense. If it's going to be a global currency, it's got to be able to handle a lot of transactions.
Right. And then there are concerns about energy consumption, the complexity of the technology, and potential for misuse.
So it's not a perfect solution by any means.
Definitely not. There are hurdles to overcome. But Ammous seems to be pretty optimistic about its prospects.
Yeah.
He even mentions this book called The Sovereign Individual.
Oh, yeah, I've heard of that one.
That predicted the rise of digital cash, back in 1997.
They were way ahead of their time.
Yeah. They envisioned a future where digital currencies would allow people to escape the control of central banks and, oppressive regimes.
Wow, so they basically saw Bitcoin coming decades ago. That's incredible. But even if this technology has the potential to, change the world,
Yeah.
it's still pretty niche, right? Most people don't use Bitcoin in their everyday lives.
That's true. Adoption is key. For Bitcoin to become widely accepted, we need to see a significant increase in user friendliness,
Yeah.
merchant acceptance, integration with existing financial systems.
But wouldn't merchants be hesitant to accept Bitcoin until more people use it?
Right.
And wouldn't people hesitate to use it until more merchants accept it? It's like a chicken and egg problem.
Exactly. A
Echo.
classic chicken and egg problem. Network effects are powerful. The more people use it, the more valuable it becomes, which in turn attracts more users.
Yeah, it needs that momentum to really take off. So what's the takeaway here? Are we all supposed to, like, run out and buy Bitcoin right now?
Well, that's a personal decision, right?
Yeah.
Everyone needs to do their own research and assess the risks and potential rewards.
For sure. But regardless of whether Bitcoin ultimately succeeds or fails as a global currency, it's definitely sparked a crucial conversation about money, government, the future of finance. And I think this deep dive has given our listeners a lot to think about. But before we wrap up part one, there's one last point I want to bring up that Ammous makes. He seems to acknowledge that a completely decentralized, unregulated financial system, like a world where Bitcoin is dominant, could have its own set of challenges.
That's true. He does raise some important questions about, how we would prevent criminal activity or enforce contracts in a world without any central authority in finance.
Right. It's like we're so used to having governments and banks and all these institutions to provide some kind of oversight and control.
It's uncharted territory for sure.
So how do we even begin to approach those challenges?
That's a good question. It's likely that new institutions and mechanisms would emerge to provide some level of governance, even in a decentralized world.
Wow. We're talking about a potential paradigm shift in how society operates, aren't we?
Yeah, I think so. And understanding the history of money, like we've been discussing, it's crucial for navigating these changes.
Absolutely. Well, I think we've given our listeners a lot to ponder with this first part of our deep dive into the Bitcoin standard. We've covered a lot of ground.
We have.
We'll continue this fascinating discussion in part two.
Picking up where we left off last time, let's dive a bit deeper into some of the potential downsides. Ammous highlights about our current system, it's a bit unsettling when you think about it. What happens when governments have this unlimited power to just print money?
Yeah, that's a really good point. I mean, it seems like common sense that printing more money out of thin air should lead to problems, right? But it's not always easy to see the consequences, in our day-to-day lives.
Right. And Ammous argues that this ability to just create money at will, it's led to a massive expansion of government power, often, at the expense of individual liberty.
Interesting. So instead of being limited by, the resources they actually have, they can just print more money to achieve their goals, even if those goals aren't necessarily, in the best interest of the people.
Exactly. And it creates this kind of vicious cycle. Governments get used to spending beyond their means, and that leads to more debt and more printing, which ultimately, erodes the value of the currency and hurts everyone.
Yeah, it's like this constant treadmill you can never really get off.
Right.
Ammous even links this to, the rise of perpetual war. It's kind of a disturbing thought that the way our money works could actually be fueling conflict around the world.
It is a provocative argument.
Yeah.
But it makes sense when you think about it. When governments aren't constrained by the need to raise taxes or maintain fiscal discipline, they're more likely to engage in these costly and prolonged military interventions.
That puts things into perspective for sure. It's not just about the economic consequences, but also, the impact on peace and stability globally.
Exactly.
So it's a pretty big deal. And then Ammous also brings up this interesting concept called bezel. Have you ever heard of this?
Oh, yeah. Bezel.
Yeah. It's not a word you hear every day.
No, it's not a common one, but it's a really insightful concept.
So what does it mean?
He uses it to describe the hidden profits that are made through, financial manipulation and fraud, essentially. And he suggests that unsound money, it creates an environment where these activities can thrive.
Okay, so profiting from activities that are unsustainable or maybe even illegal, but they haven't been discovered or punished yet?
Exactly. It's like this hidden rot beneath the surface. And Ammous suggests that our current system, with this constant devaluation of money, it incentivizes people to, chase quick profits and shortcuts rather than engaging in honest, productive work.
So it's like that get-rich-quick mentality we talked about earlier. Instead of focusing on building something of real value, people are tempted to just game the system,
Right. It becomes all about trying to stay ahead of the curve, before the whole thing collapses.
Yeah, and he contrasts this with a system where sound money would encourage people to focus on activities that create real wealth, building businesses, developing valuable skills, providing goods and services that people actually need.
Yeah, things that have lasting value.
It's almost like the type of money we use influences our values and priorities as a society.
I think it does. If your money is constantly losing value, it makes sense that people would be more focused on short-term gains rather than long-term investments.
It's a really compelling argument. So where does this leave us? If these are the potential downsides of our current system, what are some possible solutions?
Well, that's where Ammous brings us back to Bitcoin.
Yeah.
He sees it as a potential way to restore these sound money principles and limit government overreach.
Okay, so Bitcoin is the solution. But even if it has all these advantages we talked about, it still faces some pretty big challenges, right?
Oh, absolutely. We talked about some of them in the last part. Volatility, scalability, potential for misuse. These are real concerns that need to be addressed if Bitcoin's going to gain wider adoption.
So let's break those down a bit, starting with volatility. I mean, it seems like the price of Bitcoin swings wildly up and down all the time. How can people have any confidence in using it as a store of value if they don't know what it will be worth tomorrow?
It's true. Bitcoin has experienced some pretty significant price fluctuations, and that can be unsettling for people who are used to the relative stability of, traditional currencies. But its proponents argue that this volatility is partly due to its young age and relatively small market size. As adoption grows and the market matures, they believe these price swings will become less dramatic.
Okay, so it's a bit of a waiting game to see if that stability will actually materialize. What about scalability? We talked about how the Bitcoin network has limited transaction capacity. Can it really handle the volume of transactions that would be needed for it to become a truly global currency?
That's a valid concern. The current network can only process a certain number of transactions per second, which can lead to delays and higher fees during periods of high demand.
So it's like trying to fit everyone on a small bus during rush hour. There's just not enough room.
Uh-huh. Yeah, that's a good analogy.
Yeah.
But developers are working on solutions to improve scalability. Things like the Lightning Network, which aims to allow for faster and cheaper transactions off-chain.
So there's hope that these technical challenges can be overcome. But even if we solve the volatility and scalability issues, there's still the question of potential for misuse. Some people worry that Bitcoin could be used for illegal activities or that it could lead to more financial instability. How do we address those concerns?
Those are legitimate concerns. It's important to remember that any new technology can be used for both good and bad purposes. Bitcoin is no different.
So it's not the technology itself that's inherently good or bad, but how it's used.
Exactly. And as with any new innovation, we'll need to adapt and develop safeguards to mitigate the potential risks. This might involve new regulations or even entirely new approaches to governance in a decentralized system.
Right. It's like we're entering uncharted territory here with a lot of unknowns.
Yeah, it's true. We don't have all the answers, and there are potential challenges that we need to be aware of, but there are also, some really exciting possibilities for a more equitable and transparent financial system.
Okay, so a lot to consider, both the potential risks and the potential rewards. We've covered a lot of ground in this part, from the potential downsides of our current system to the challenges and possibilities of Bitcoin. What's one key takeaway you'd like to leave our listeners with as we wrap up part 2?
I think the most important takeaway is to be aware of the power of money. It shapes our choices, our values, and ultimately the kind of society we create. Whether or not you agree with all of Ammous's conclusions about Bitcoin, his book is a powerful reminder that we need to think critically about the systems that govern our lives and be willing to explore alternatives.
That's a great reminder. We can't just take things for granted and assume that the way things are is the way they have to be. We have the power to choose a different path. And we'll continue this fascinating discussion in part 3, where we'll explore those alternative paths in more detail. All right, welcome back for the final part of our deep dive into the Bitcoin standard. We've covered a lot of ground so far, but I'm really excited about this last part. We've talked about the history of money, the problems with our current system, and the potential of Bitcoin. Now I want to explore those alternative paths you mentioned earlier. What a future with sound money might actually look like in practice.
Yeah, it is fascinating to consider what a world designed around sound money principles might look like. Ammous argues that such a system, it would foster long-term thinking, more responsible economic behavior, and greater individual freedom.
So instead of constantly chasing short-term gains and just trying to outpace inflation, people would be more inclined to save, invest, build for the future.
Exactly. With sound money, the incentives would shift. People would be rewarded for patience, prudence, and creating real value. Not, seeking quick profits or trying to manipulate the system.
It sounds almost utopian, honestly, but wouldn't that require a pretty fundamental change in our our mindset and in the way our institutions operate?
It would definitely require a shift in thinking, no doubt. But Ammous believes that human beings, we're adaptable. We can thrive in a system that rewards sound economic principles. It's just we've gotten so used to this other way of doing things.
That makes sense. He even suggests, that sound money could lead to a more peaceful world. That seems kind of counterintuitive. How could the way we handle money impact something as complex as global conflict?
Yeah, it's a bold claim. But he argues that governments with unlimited access to money printing, they're much more likely to engage in these costly and prolonged wars. They're not constrained by the need to raise taxes or maintain fiscal discipline, so the true cost of conflict is often hidden from the public.
Right. It's like it's easier to justify going to war when you can just print more money to pay for it. You don't have to ask citizens to make those real sacrifices, through higher taxes or whatever.
Exactly. But with a sound money system, governments would be forced to be more accountable and transparent about the costs of war. And it would be a lot more difficult to fund these military interventions that lack broad public support.
Yeah, that makes sense. If we look back at history, a lot of wars have been financed through debt and inflation, and it's future generations that end up burdened with the costs.
Exactly. It's a pattern we see over and over again. Ammous believes that by restoring sound money principles, we can actually, break that cycle and create a more peaceful and prosperous world.
Okay, but let's play devil's advocate for a minute. Let's say we could somehow, wave a magic wand and implement a sound money system globally. What would that actually look like in practice? Would we go back to the gold standard? Or would we see a system based on digital currencies like Bitcoin?
It's hard to predict exactly how a future with sound money would unfold. There are a lot of different possibilities. And the best solution might vary depending on specific circumstances. What works for one country or region might not work for another.
So there's no one-size-fits-all answer.
Not necessarily. The key is to establish a system that's resistant to manipulation, promotes transparency and accountability, and aligns incentives with, long-term value creation.
So it's not just about, choosing a particular form of money. It's about creating a whole new framework for how we think about and manage economic activity.
Yeah, that's a great way to put it. It's about shifting our priorities away from those short-term gains and towards building a more sustainable and prosperous future for everyone.
Well, Ammous definitely gives us a lot to think about. He challenges a lot of our assumptions about money and its role in society. I think even if you don't agree with all of his conclusions, the Bitcoin standard is a really thought-provoking exploration of a topic that impacts every aspect of our lives.
I couldn't agree more. Whether you're a seasoned economist or just starting to learn about these concepts, the book offers these valuable insights into the history of money, the challenges of our current system, and really the potential for a better future.
So what's the one big takeaway you'd like our listeners to walk away with from this deep dive?
I think the biggest takeaway is just question everything. Don't take anything for granted. Don't just accept the status quo. Think critically about how our monetary system works, its impact on our lives, and the possibilities for change.
That's a great call to action. And we encourage all our listeners to continue exploring these ideas and engage in conversations about the future of money. It's a topic that affects all of us. And as always, thanks for joining us on this deep dive into the Bitcoin standard. We'll see you next time for another fascinating exploration of, the world of ideas.